Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name is Min. I'm your co-host with Debbie from NDIS Property Australia, and you listen to the SDA Housing Podcast. Australia explains, highlights, guides, and brings awareness about all things SDA in this ever-changing NDIS world. Debbie, morning.
Good morning, Min.
Let's talk about our recent trip last week to Melbourne.
Yes, we had a very long overdue visit to Melbourne. We haven't been there since we held our masterclass earlier this year. Lots of people to catch up with, lots of new people to meet. So it was a very busy couple of days.
It was busy and it was very productive. I think we achieved a lot of things in terms of on the ground market due diligence and collaboration. Let's talk about some of our people we met, Debbie, on our whiteboard behind me.
Alrighty. So firstly, we met with a contact who we've been working with for a few years now, a builder developer who's been very active in the Melbourne market for many years. Very interesting, although not really surprising, the information that we received, which was Min.
Greenfield areas for SDA, which is the new estates, is
dead.
Over, dead,
Yep.
Finished.
Yeah, which we kind of knew. That's the data that has been coming out in the last 6-9 months out of Melbourne, is that everywhere is now oversupplied. So they're concentrating only on some regional areas, but also doing knockdown rebuilds in Melbourne.
So the brownfield areas, infill suburbs, where pretty much middle ring to inner, where the areas are built up already and not brand new estates of housing estates, is the way forward to really get involved in SDA. So I wouldn't say is oversaturated. I'm saying Melbourne region is pretty much reached its equilibrium of balance of supply and demand in most of those areas we've all talked about the last few years, I guess.
Uh-huh. Yeah. So that was interesting to get their feedback on the current market situation in Melbourne and what they're doing, how they've shifted.
By the way, everyone, if you're seeing house and land stock in the West Melbourne, avoid at all costs. Do not listen to the builder or the sales agent or the spruiker who's trying to flog you a house west of Melbourne.
There's a massive oversupply there. It is the number one most oversupplied region of Australia.
Yeah. Buyer beware. Moving on, what else did we learn from our next meeting we had?
Okay, so we met with a lady who is an agent, land, property, commercial agent. She has been working now for quite some time with a bunch of funds, different organisations within the SDA world, working very hard with a fund they have that is listed on the stock exchange to develop really good quality SDA projects, not only in Melbourne, but also up the eastern seaboard up to Queensland as well.
Swing with small fund managers, large fund managers, private family offices, private equity as well. So a range of different corporate clients. And definitely a very well-networked lady who we're going to catch up with on Wednesday, though. She said we didn't.
And we are, yeah.
She said one of her, it may be the private equity firm, has an appetite for 1,000 apartments of SDA per year for 5 years. 5,000 apartments.
Predominantly Melbourne and Sydney.
Yes.
So really, really interesting to hear her take on the market, on what she's seeing the demand is from the institutional investors now. So that was a really good connection to make there. We're very excited to work with her. They work with a lot of the distressed properties that the banks are selling. So they do get development sites at a good price, which means that they can then look at it as a potential SDA and do something with it if it suits.
Yeah.
We also met a private fund who we've spoken to in the past. We've been talking to them and they've been involved in SDA now for some time. They do have some developments in Queensland. They're looking at...
They are an asset manager for a private fund.
Yeah, that's right.
Overseas, yeah.
Yeah, so they're looking at still deploying a significantly large sum of money into the Australian SDA market.
But their catch was must be built or almost built.
Yeah, so...
They have $100 million they must deploy in the next 18 months.
That's right. So they're predominantly after small apartment complexes or villa sets or, just up to maximum of 10 dwellings per site, ideally built, or they will go as far as something that is DA'd but will be built within 12 months maximum. So they obviously have a lot of very specific due diligence that they do on any site presented, but fortunately with the previous agent and also our other contacts in Melbourne, we hopefully will be able to bring a number of properties. And also they're not looking just in Melbourne, they're looking also in other areas. So we've got some sites in Brisbane that they're looking at the moment too.
Yeah. So they are looking at probably 5 or 6 different projects we have on our books that Grace is dealing with at the moment on our books, yeah.
Yeah, so that's really exciting. We also have another contact that we met with. They are actually an SDA provider. They're doing significant work in the housing area. They're actually opening a new business as a provider just for apartment developments. They're working with some big SIL providers. They're also working with Summer Foundation, I should say, to get more contacts within the SIL industry. Their aim is to be the biggest SDA provider in Australia, but they are doing some really good stuff. We're very excited to be able to work with them and the SIL organisations that they are now going to be working hand in hand with.
I think they've really seen those boys there. They really watched our growth in our podcast in the last 6 months or so. He's always listened to our podcast straight away when it comes out. He said that he'll bring more and more bigger SILs to the table to help to support the many locations we have that are coming out of the ground as part of our service, because some of our listeners may not realise is we do procure a lot of projects from the ground up, and we assist with the feasibility, the research, and also the design with these developers to launch to market and sell, and either sell as pre-sales as mum and dads, or where the tide's turning now to the corporate funds. So because I think a lot of our stock now, which is off market at the moment, coming to market, they see the benefit of actually working with our team here in Brisbane, even though we're working predominantly in Melbourne at the moment. So they're very keen to work with us. Yeah.
Yeah. We met with a couple of small developers. When I say small developers, they've got a few sites that they have either already got plans and DA, or they're working towards, like a 10-pack or a 7-pack of apartments and
they're quite unique too. The unique areas,
very unique and really inner area, blue chip areas, high demand areas, prime products. Which when you look at the data, you'll think they have no problem getting these tenanted because they are amazing, beautiful apartments or villa complexes.
Now, one of them had 15 ILs and 15 IL apartments. Yes, they were 15 and 2 OOAs.
Mm.
And we just sat there for that hour and a half. We said, no, this has to change. It can't be all ILs. These are the numbers. I mean, the suburb they're working on was only 2 apartments ever built in the suburb. It's a very tightly held old suburb in Melbourne, middle ring suburb. And I think that will probably end up pulling back to maybe 10.
Yeah.
10 or so.
So we discussed with them the idea of, obviously they've got the plans all done up, not DA'd yet, I don't think, or was it?
It was, but they weren't aware of the IL changes 8 months, 9 months.
That's right. So we spent a good hour and a half chatting to them about the market and what we thought might make a better SDA development. So a mixture of high physical support and IL apartments, given the actual demographics of the area where it is. So, it's going to be a bit of back to the drawing board for them to redo their plans. But at the end of the day, hopefully it means that they'll have a far better development.
Mind you, Debbie, I met them a year ago at an SDA conference in Brisbane, and they had that side back then. So to meet them again a year later, and now all the work they've done on that site is now not for nothing, but back to the drawing board kind of approach. It's going to be a bit of I think it's almost there. But again, I wish they consulted us, people like us or other providers, to have given them ideas to not build 15 IL apartments, which goes to show everyone who's listening, always talk to the experts, right? Don't rely upon an architect, which was the case here, to do the design work, and that's all it was. You need to have constant collaboration with SILs, SDAs, advisors, assessors, town planners and architects to work together to deliver the products for the market. Do not rely upon one specialist to try and give you the advice, because so many times it can be the wrong advice, or the market evolves in that time frame.
And the market is moving so quickly at the moment in SDA, as we keep saying. So you just got to get as many different opinions as possible to get the right advice. So their site, they also had another
4 more sites.
4 more sites in the same suburb. But again, a very good blue chip suburb, very exciting.
And we advise them to consider villas, manor homes, double-story house to go with that complex of 15 or 10 units that we end up doing. So a mixture of product in the area would be appropriate.
That's exactly right, yeah. We also met with another guy who had a development, again, very, very blue chip inner area.
Across from Monash University.
Right opposite Monash University, yeah. So Melbourne East.
Yeah, but what was interesting, Debbie, was the size of the block. Can you please describe the size of the block, please, Debbie?
So the width of the entire block is 6 metres, 45 metres long, 89 metres long. So really
300 square metres. Let's be very clear. 300 square metre site, 6 by 50.
Yeah. So we've seen the renders of what the facade's going to look like, and of course the internal images. It looks amazing, but very interesting design. It's going to go up 8 floors, the ground floor being car parking, and then 7 apartments on above. So each floor will be 1 apartment. It's slotted in between the buildings, so obviously there's no space on either side.
So either side is 2 medium-rise apartment complexes, and in the middle is a tiny little block in the middle.
Yeah, 6 metres wide. But when you think about it, if you measure out 6 metres, it's actually wide enough for an apartment. Yes, it's long and you worry about the light. There's light wells that come down in the centre of the apartment. The back of it is facing north, so there'll be a lot of natural light coming in that way. Very interesting design and a really premium product.
Now, the price is so premium. The premium product is also price premium as well, premium price. And we said to him that it can't be this price. You gotta lower the price down, number one. Number two, throw in incentives, furniture package to fully furnish some of the apartments, have a motor vehicle on site so that the residents can use the vehicle for free. What else? Have a maybe a rent guarantee for a year, if it is vacant. But given where it is, it's a blue chip area across the road from the
university
and the race course as well.
Nearby there, Caulfield, yeah.
Yep. It's a premium product which will attract the right participants and the right fans.
For sure, yeah.
And the apartments are 130 to 157.
Yeah, they're really big.
Massive.
They're very spacious. So there's and there is the car parking on the ground, a little bit of car parking plus the OOA.
And the city views from the balcony at the back there is gorgeous as well, city views.
Yeah, looking straight up at the city. So that was a bit wow. We were pretty impressed with that. And, we met with a bunch of other people, but I think the last person that we met with is a major SIL.
Small SIL.
Small SIL and getting very much into development. But
so he's an SDA provider and a SIL and a developer.
2 different companies.
Yes.
So, we always do say, be careful, mixing all these, but
he's doing it right.
He's definitely doing it right, and he really understands the market and how things work within the NDIS world.
So much so that he's going out there, going to site around the Frankston region. He's acquiring the land. He's doing the design himself, extra large floor plans as well, Debbie. And he's underpinning his business by actually going to put the money where his mouth is and actually building the stock. So I always respect the providers who go out there and actually build the stock themselves with their own money, because they're putting their money where their mouth is.
Yeah, and they know what they want. They know what works. So when you see what they're doing, it's going to be prime. It's going to be amazing, beautiful homes for people who really want to live there. And, of course, the SILs are going to want to work there because they've designed it.
I really respect guys like that who are working on a small boutique provider business but also go out there procuring land and sourcing their own architects and then their own designers and their own builders, and that then they're finding business themselves. They're the guys who are on the ground really working there at the grassroots level, you know? And I really respect those guys because they work really hard, you know?
Yeah. So look, we had some other meetings as well that were great catch-ups with some of our colleagues and other people that we work with in Melbourne market.
But the overall summary of this trip, if I can walk away with, Debbie, let me ask you this question. If you can walk away with a 1-2 liner of where you feel the market is for SDA, how would you give that 2-liner summary?
It's no longer for the mum and dad investor, it's for the big boys.
I would say the big funds, the sophisticated groups, the family offices, they've been on the sidelines watching and waiting for the last 1 or 2-ish years. And now that we're seeing American interest rates going down, we'll see more of that rate drop in Australia as well, which means the time is right and ripe, RIPE, for the bigger guys to come in and snap up the distressed assets. You know, we know that the land price and build price has been too high the last 2 years or so. We know that. So they know that as well. So they've been watching and waiting, and now they're coming in with their cash to buy up. Now, they're buying up 10, 15 in a go, not one. And this is where, with mum and dad buyers, they come in and they hope they're doing the right thing. They don't want to make a mistake, and if they do, they're going to have to suffer the consequences. But these big boys with funds, cash capital, sitting there waiting, they go in there, like, making a mistake or two is nothing because it's not their money, let's be honest.
And because they're diversifying so much, it doesn't really matter if
Correct.
one product is not great and doesn't work.
8-9% return, 8-10% returns.
Yeah. So the mum and dads and the other smaller investors that are coming in and wanting to get the 12-15% returns, it's just not going to happen now because those cheap products in the greenfield estates will not get tenants. They will not work. And if you do want to buy an individual product, you're looking at the 1.2, 1.3 plus mark. So most of the smaller, experienced investors who are looking to deploy up to $1 million, it's gone. The only time you can get in on it maybe is in an apartment. And there will still definitely be apartments available for individual buyers, but definitely the tide is turning.
You know, we still keep on seeing people, I want a house. But they don't realise the minimum price point entry for a house is 1.2 and they can't afford it. And Debbie, 2 years ago, there wasn't much talk about apartments, no one's really talking about it. I mean, we were waving our flag ourselves, yes, but now when we talk to the big boys, they're all talking apartments. The big boys are not going into the land estates. They're not. They're in the inner city, middle ring, apartments, villas, apartments, projects, developments. That's where they play, right? And let's be honest, if you had a lot of money and as a portfolio business and your risk was higher and diversification and your time frame was longer, you'd go where the bulk volume of product is, and that's going to be inner ring, middle ring suburbs, not outer ring where the mum and dads play.
Yeah, because those areas all over Australia now we're seeing are oversupplied or they've already met supply. There's just no point building anything more out there. Just don't do it. It has to be in the areas where there's still demand.
True. Now, in saying so, Debbie, we still meet a lot of people who have their own sites in middle ring suburbs or their own suburbs. If you custom design your own product in your own unique area, you'll still be okay. So we don't mean it. When Debbie says it's oversupplied, yeah, it's pretty much balanced.
The greenfields.
Yeah, but there's still pockets around Melbourne and Sydney and Queensland. There's pockets everywhere still. If you do it right, you design it right, and you deliver a high-quality product, you will still attract participants.
Yeah.
And Debbie, I would dare say that maybe in a few years' time from now, 2-3 years from now, that balance we're in now will shift towards more like, more need in the future. How do I say this? In a perfect world, there's constant supply of product and there's constant supply of participants in a perfect world, right? And we're sort of getting to the stage now. But when there's reservation and mum and dad's holding back and the flow of money coming into SDA may differ because of the time in the marketplace, then as more participants come through for approvals and funding, that demand will go above the equilibrium line and people come back to SDA again in maybe 3 years' time.
Look, we've seen such a shift in the last few years and it's going to turn again.
Yeah, it'll turn.
For sure.
So the equilibrium moment we're in now won't be there forever. It'll change again. Yeah.
But that's where we are at the moment.
Yeah. So buyer beware. Be careful who you're talking to. Get the right advice. We're happy to help out where we can. And if you're a big boy, please knock on our door. We're happy to give advice as well. Any final words before we go, Debbie?
I guess this just cements what we always say is how quickly the whole SDA landscape changes. And you've got to be on top of what's going on now and in 3 and 6 months' time, not what the spruikers and the marketers are saying has happened because their data's a year old.
You're going to plan in advance. And also our masterclass coming up serves the purpose of education and collaboration. Our masterclass, what's going on in the masterclass, Debbie?
30-odd speakers, about 25 speakers from outside of our company, from all different organisations that specifically work in SDA. We have about 25 private meeting rooms, so people who register will be able to log in and have conversations and discussions with all of these people, should they so wish. So look, it's going to be an amazing opportunity to meet with some people in the SDA world that you wouldn't normally do so. Make sure that you register. You'll be given a full agenda of who's on when. There'll be recordings. You'll be able to access those. So
Registration's on Eventbrite.
It is.
For a Zoom event.
Yep.
And the number for booking so far is about?
Well over 550 at the moment, up around 560.
Yep. And we think we'll be hitting 600 to 650 by
next Friday.
Yep.
The 4th of October. So the Eventbrite link will also be listed in the description of this episode. So just jump down. Make sure you register. You don't necessarily have to be there on the day, but if you don't register, then you won't get access to the recordings. And if you do register, even if you can only spare half an hour or an hour to jump on at some point during the day to meet up with some really interesting people.
We're doing this to help improve collaboration amongst the marketplace. This is a free event. No one's getting paid any money. There's no product flog here. We're all bringing together people who mean well and want to do well by others in the industry. And we hope you can support us by attending for a couple of hours at the event as well, please. Just to show our support to the speakers who are putting out their time for the day as well, please.
Absolutely.
All the best. We'll talk to you soon. If you need any help, please give us a call, no matter what the topic is, on 1300 254397. Special shout out to Kevin and Jonathan. I know you're listening. You guys are doing great work out there down in Melbourne, and we can't wait to do more work with you. See you later, guys. Bye-bye.
Bye.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.